In 2025, California's housing market is a landscape of stunning beauty paired with staggering costs. Median home prices across the state often soar past $1 million, with some areas demanding double or triple that. At mortgage rates hovering near 6.8% to 6.9%, monthly payments can easily reach $5,000 to $15,000, pushing annual ownership costs well beyond $100,000. Property taxes alone can exceed $30,000 per year, while insurance premiums, driven up by wildfire and flood risks, add thousands more. Amid golden coastlines, rolling vineyards, and mountain views, the dream of owning a home here remains enchanting, yet the price tag has never been more daunting. Let's explore Top 10 Most Expensive Housing Market. In California, number 10, Oxnard. Oxnard, a coastal city in Ventura County, has long been one of Southern California's more affordable beach towns compared to Malibu or Santa Barbara. But in 2025, that word feels ironic. With a median home price of $931,500, buyers now need an annual household income of roughly $165,000 to afford a typical mortgage here, assuming 20% down and current 30-year fixed rates hovering near 6.8%. That's a monthly payment north of $4,200 before property taxes, which average 1.02% of assessed value in Ventura County, adding another $9,500 plus per year to the bill. Insurance premiums have also spiked due to wildfire risk in surrounding hills and flood risk in low-lying coastal zones, pushing some annual homeownership costs above $55,000. Inventory levels in early 2025 have climbed nearly 22% compared to the same period last year, and average days on market have stretched from 28 days to 54 days, signaling buyer hesitation. Price reductions are becoming more common. Roughly 1 in 4 listings saw at least one price cut in the past 3 months, with some slashed by $50,000 to $100,000 to attract offers. The slowdown is tied to affordability erosion. Since 2020, Oxnard's median home price has risen by nearly 38%, but local wages have grown only about 12%, creating a widening gap between income and housing costs. Rents haven't provided much relief either. The median rent for a single-family home now sits around $3,200 per month, which still demands a 6-figure income to meet the standard 30% rent-to-income rule. Many landlords are also passing on higher insurance and maintenance costs to tenants, further squeezing the rental market. While Oxnard retains appeal with its 20-plus miles of beaches, harbor communities, and proximity to Los Angeles, the current housing market reflects a broader California trend. Prices remain historically high even as demand softens. The combination of elevated mortgage rates, growing inventory, and slower sales volume suggests sellers no longer hold the upper hand, and buyers are starting to wait for deeper discounts. Number 9. San Luis Obispo. San Luis Obispo, nestled between rolling Central Coast hills and the Pacific Ocean, has long marketed itself as the happiest city in America. But for home buyers in 2025, the happiness comes with a price tag, a median home price of $953,400. To comfortably buy here with 20% down, a household would need an annual income around $170,000, which is nearly 2.5 times the county's median income of roughly $69,000. That mismatch has become one of the clearest warning signs of an unsustainable market. Mortgage rates hovering near 6.9% mean a typical buyer is facing monthly payments of $4,450, not counting SLO County's property tax rate of about 1.1%, which adds $10,500 annually. Factor in homeowners insurance, rising sharply due to wildfire risk in nearby foothills, and yearly ownership costs often exceed $60,000. For a city where the largest employment sectors are education, tourism, and small business services, these numbers don't align with local earning power. The slowdown is visible. Sales volume is down nearly 27% year over year, and the median days on market has more than doubled, from 23 days to 49 days. Around 31% of active listings have undergone at least one price reduction since January, with some slashed by over $125,000 to attract reluctant buyers. Rental costs aren't much better. The median rent for a modest two-bedroom hovers around $2,850 per month, which still requires an income of roughly $114,000 to avoid being rent-burdened. Many renters hoping to save for a down payment are finding it nearly impossible. While San Luis Obispo remains beloved for its farmers markets, Cal Poly's influence, and its walkable downtown, the housing market tells a different story in 2025. Inflated prices, eroding affordability, and increasing seller concessions as buyers push back. Number 8. Salinas. Salinas, known as the salad bowl of the world for its vast agricultural output, has historically offered more affordable housing than its Monterey Peninsula neighbors. But in 2025, the median home price sits at a steep $954,700, demanding an annual income near $171,000 to buy comfortably. That's a sharp contrast to Monterey County's median household income of about $78,000. At current interest rates of around 6.8%, a typical monthly mortgage payment, 20% down, lands at $4,460 plus property taxes at roughly 1.05%, adding $10,000 annually. Insurance rates, especially for homes on the city's outskirts, have also risen due to wildfire and flood risks. Together, annual ownership costs can top $59,000, well beyond what many local families can afford. The market is showing clear signs of strain. Home sales have dropped nearly 25% compared to the previous year, and the average days on market has lengthened from 26 days to 52 days. About 29% of listings have had price cuts since January, with reductions often exceeding $80,000. Investors who once scooped up properties for rentals are pulling back, citing declining cash flow as higher interest rates eat into returns. Renters haven't escaped the squeeze. The median rent for a single-family home is around $3,150 per month, requiring an income of $126,000 to stay within standard affordability guidelines. With local wages largely tied to agriculture, retail, and service jobs, that's unattainable for a significant portion of the population. Even with its proximity to Monterey Bay and coastal scenery, Salinas' housing market in 2025 reflects California's larger affordability crisis. High prices, rising carrying costs, slower sales, and growing buyer resistance. For many locals, home ownership feels more out of reach than ever before. Number 7. San Diego. San Diego may be famous for year-round sunshine, beaches, and a laid-back lifestyle, but in 2025, the cost of buying into this Southern California paradise is anything but relaxed. With a median home price of $1.04 million, buyers need an annual household income of roughly $185,000 to afford a typical 20% down payment purchase at current mortgage rates of around 6.9%. That translates into a monthly payment near $4,860, plus San Diego County's property tax rate of about 1.1%, adding $11,400 annually. Insurance costs are another stress point. Premiums for homes near wildfire-prone canyons or coastal flood zones have risen sharply, with many homeowners now paying over $2,800 per year. All told, carrying costs on a median-priced home can exceed $68,000 annually, a figure well above the city's median household income of roughly $93,000. Market activity shows a clear slowdown. Home sales in the county are down about 23% year over year, while the median days on market has climbed from 21 to 47 days. Roughly 28% of active listings have had at least one price cut since January, with some reductions topping $150,000. Sellers who once fielded multiple offers in 48 hours are now offering rate buydowns and covering closing costs to entice buyers. Renters aren't faring better. Median rent for a two-bedroom apartment in San Diego sits at $3,400 per month, demanding an income of at least $136,000 to avoid being cost-burdened. Many residents are stuck renting, unable to save for a down payment while paying sky-high monthly housing costs. Despite its vibrant neighborhoods, job market, and coastline, San Diego's 2025 housing market highlights the affordability crisis gripping much of California. High prices, rising ownership costs, and an increasingly hesitant pool of buyers. Number 6. San Francisco. Once the poster child for runaway housing prices, San Francisco's market in 2025 is facing a pronounced cooldown. The median home price has slipped to $1.32 million, still demanding an annual income of around $230,000 for a buyer with 20% down at current rates near 6.8%. That's a monthly payment of roughly $6,160, plus San Francisco's property tax rate of about 1.17%, adding another $15,400 per year. Homeowners' insurance costs have been rising here too, especially for older Victorian properties requiring earthquake coverage. Annual premiums easily exceed $3,000 in many cases, pushing total yearly ownership costs well above $90,000. The city's median household income, around $137,000, falls far short of what's needed to buy without stretching finances. Market indicators point to a sharp shift in balance. Sales are down 31% year over year, and median days on market have doubled from 19 to 38 days. Nearly 35% of listings have seen price cuts since the start of the year, with many reductions in the $100,000 to $250,000 range. Some high-end properties have lingered for months, forcing sellers to pull listings altogether or re-enter at lower prices. The rental market remains punishing. Median rent for a two-bedroom apartment is around $3,850 per month, meaning renters need about $154,000 in annual income to avoid being rent-burdened. Yet, even with rents flattening, many renters find saving for a down payment impossible in the city's high-cost environment. While San Francisco still draws residents with its cultural scene, tech presence, and scenic views, the 2025 housing market is a stark example of how quickly conditions can shift when affordability erodes, borrowing costs spike, and buyer demand cools. Number 5. Anaheim. Anaheim might be known worldwide as the home of Disneyland, but for buyers in 2025, the real roller coaster is the housing market. With a median home price of $1.45 million, Anaheim now demands an annual household income of around $255,000 to afford a purchase with 20% down and current mortgage rates hovering near 6.9%. That equates to a monthly principal and interest payment of about $6,780, before adding Orange County's property tax rate of roughly 1.06%, which tacks on another $15,300 per year. Insurance costs are increasingly burdensome, particularly for homes near wildfire-prone hillsides. Many homeowners now pay between $2,500 to $4,000 annually for coverage, and some have been dropped by insurers altogether, forcing them into costly state-backed plans. Total yearly carrying costs for a median-priced home often surpass $95,000, an enormous leap from the city's median household income of roughly $100,000. The market is clearly softening. Closed sales are down nearly 29% year over year, and the average days on market has more than doubled from 22 days to 50 days. About 30% of active listings have undergone price cuts in recent months, with reductions ranging from $75,000 to $200,000. Even homes near the Anaheim Resort District and Platinum Triangle, once considered near guaranteed sells, are sitting longer. Rents are equally steep. A modest three-bedroom single-family home now commands around $3,600 per month, requiring an income of $144,000 to stay within the standard 30% rent-to-income rule. Many families are opting to rent longer, unable to save enough for down payments while covering inflated monthly housing costs. Anaheim's 2025 market reflects a broader Southern California pattern. High asking prices colliding with higher borrowing costs and stagnant wages, creating a climate where sellers are forced to negotiate and buyers are increasingly cautious. Number 4. San Jose. In the heart of Silicon Valley, San Jose has long been the epicenter of California's most extreme housing prices. In 2025, the median home price stands at $2.02 million, requiring an eye-watering annual income of around $355,000 to purchase with 20% down at current rates of 6.8%. That's a monthly mortgage payment of roughly $9,470, plus Santa Clara County's property tax rate of about 1.11%, adding another $22,400 each year. Insurance costs for high-value homes often exceed $4,000 annually, and earthquake coverage can add several thousand more. Total yearly ownership expenses on a median-priced property can easily surpass $135,000. This is in stark contrast to San Jose's median household income of around $140,000, underscoring the severe affordability gap. The slowdown in sales has been sharp. Transaction volume is down about 32% from last year, and median days on market have stretched from 18 to 42 days. More than 35% of listings have undergone price cuts since January, with some reductions exceeding $300,000 in luxury neighborhoods. Homes once snapped up by tech workers are now sitting, as stock market volatility and high interest rates cool demand. Rents are punishing too. The median rent for a two-bedroom apartment hovers near $3,900 per month, requiring an annual income of $156,000 just to avoid being cost-burdened. Many would-be buyers are trapped in high rents, unable to save for a down payment in one of the most expensive metro areas in the country. San Jose's 2025 housing market reveals the fragility of even the priciest markets when affordability collapses. Sky-high prices, rising carrying costs, and a thinning buyer pool are forcing a reset. Number 3. Malibu. Malibu has always been synonymous with oceanfront mansions, celebrity neighbors, and jaw-dropping sunsets. But in 2025, the housing market is showing cracks beneath the glossy surface. With a median home price of $3.3 million, buying here now requires an annual household income of about $580,000 to manage a 20% down payment purchase at current mortgage rates near 6.9%. That's roughly $15,900 per month in principal and interest alone, plus Los Angeles County's property tax rate of around 1.1%, adding another $36,300 annually. Insurance costs have skyrocketed. Fire danger from the Santa Monica Mountains, combined with coastal flooding risks, has pushed some premiums beyond $12,000 per year. Many owners are now in high-cost state-backed fire insurance plans after private insurers pulled out of the market. For a median-priced home, total yearly carrying costs can exceed $240,000, making it one of the most expensive places in the nation to own. The slowdown is stark. Sales volume is down nearly 35% year over year, and high-end listings are sitting on the market for an average of 94 days, up from just 47 days a year ago. Nearly 40% of active listings have had price reductions since January, with some slashed by over $500,000. Even trophy estates with beach access are taking longer to sell, as fewer buyers can afford the steep ownership costs. Rental prices remain punishing, with luxury beachfront homes often commanding $20,000 to $40,000 per month, far beyond reach for most long-term tenants. Many owners are shifting to short-term vacation rentals to cover costs, further reducing local housing availability. Malibu's 2025 market reflects the extreme upper tier of California's housing correction. Even the ultra-wealthy are negotiating harder, and sellers are learning that prestige doesn't guarantee a quick sale. Number 2. Beverly Hills. Beverly Hills may still carry the allure of 90210 glamour, but in 2025, its housing market is feeling the sting of higher rates and tighter buyer pools. The median home price here sits at $3.4 million, requiring an annual income of roughly $600,000 to purchase with 20% down at current 6.8% rates. That's about $16,400 a month for principal and interest, plus Los Angeles County's property tax rate of 1.1%, adding over $37,400 annually. Luxury insurance costs are enormous. Many estates with pools, guest houses, and extensive landscaping face premiums between $10,000 and $15,000 per year, especially with wildfire risk in the surrounding hills. For a median-priced property, annual carrying cost can approach $250,000, well beyond what even many high-income professionals can justify. Sales data shows a clear shift. Transaction volume is down 33% year over year, and average days on market have doubled from 40 to 82 days. About 38% of current listings have undergone price cuts, often ranging from $250,000 to $1 million. Some longtime owners are quietly offering off-market discounts to move properties faster without publicizing a markdown. The luxury rental market is equally steep, with high-end homes leasing for $18,000 to $35,000 per month. Even wealthy tenants are pushing for rent concessions, aware that landlords face extended vacancies if they hold firm on pricing. Beverly Hills' 2025 market shows that prestige ZIP codes are not immune to a slowdown. When ownership costs soar and fewer qualified buyers are in play, even iconic neighborhoods see price reductions and longer listing times, a reality now settling into one of the most famous markets in the world. Number 1. Palo Alto. Palo Alto, the crown jewel of Silicon Valley, is still home to tech billionaires, venture capital executives, and some of the highest property values in the nation. But in 2025, even here, the housing market is showing strain. With a staggering median home price of $3.5 million, a buyer needs an annual household income of roughly $615,000 to purchase, with 20% down at current mortgage rates near 6.9%. That's a principal and interest payment of about $16,900 per month, plus Santa Clara County's property tax rate of 1.11%, adding another $38,800 annually. Insurance costs are hefty, especially for older homes with earthquake retrofitting needs, often running between $5,000 and $8,000 per year. For a median-priced property, total annual carrying costs can exceed $255,000, an expense level that even some high-earning tech professionals hesitate to take on, particularly in a cooling market. Sales have slowed dramatically. Closed transactions are down nearly 36% year over year, and median days on market have climbed from 19 days to 46 days. Roughly 37% of listings have undergone price cuts since January, with reductions ranging from $300,000 to $1 million in some cases. The once frenzied bidding wars of the pandemic era have largely disappeared, replaced by negotiations and extended listing times. Even Palo Alto's luxury rental market is softening. High-end homes that once leased for $15,000 to $25,000 per month are sitting vacant longer, with some landlords offering free months or furnished options to attract tenants. Meanwhile, the median rent for a standard single-family home hovers around $6,500 per month, demanding an income of at least $260,000 just to meet the 30% affordability threshold. Palo Alto's 2025 housing scene underscores an important reality. When borrowing costs climb, even the wealthiest zip codes can't escape a slowdown. The combination of sky-high ownership costs, shrinking buyer demand, and heavier carrying expenses has shifted the balance. And sellers here are finding out that not even Silicon Valley's prestige can guarantee a quick, full-price sale anymore.